If I have to say one thing to you, what's the one problem Australia is dealing with? This is the problem. The problem is a unique problem. The red line is investment in mining as a percent of GDP. So it went from 1% to 8%. It's now on its way back to 1%. Now, from a mining point of view, what's happened is they've essentially stopped building new mines, and particularly it's LNG. Okay? So, simple way of thinking about LNG, we go from 5% of the world's LNG production to 30% of the world's LNG production. So, within 12 to 18 months, you'll be getting $12.5 billion of additional exports every quarter. So you're going to get, GDP is going to be fine. It's the wrong measure. The problem's going to be mining investment. So exports, they're worth 2%. That's in the bank for the next couple of years. The mining investment means that essentially that part of mining is going at -20, and it's half of total business investment. So the issue then becomes, unless you fill in the hole that that's going to cause, you're going to end up with domestic demand around 1%. And around 1%, domestic demand doesn't generate many jobs. So what you're really saying is outside of this big mining investment, what's happening is the domestic economy is growing at 1%, which is why the Reserve Bank's got rates at 2%. It's why they're saying the currency should be lower. And while some of us privately are saying the government should be spending more money on infrastructure to get the economy going. So a lower currency helps, but it's not necessarily enough by itself. So the big message is to try and get the consumer to spend more, for the non-mining investment to start to spend some more, and to get housing going, and there's wealth effects coming out of housing as well. So how's the Australian economy going? We run a survey, 1,400 firms every month, came out yesterday. It's business confidence. Think of it as animal spirits. The red line is the trend. The dotted line is the actual, so it bounces around occasionally. If you go back to the early days, that big kick up back around a couple of years ago was the change of government. Never really seen that before. Business really didn't like the other mob at present. What happened is they didn't then get that phased by the budget last year. It's really what really happened was the economy started to sort of slow down a bit. Where are they now? They're starting to go back up. Yesterday's numbers weren't quite as good. The main reason they weren't quite so good was, and we'll come to this in a minute, is mining. So the confidence levels in mining just went crunch again. The other thing that matters in terms of these confidence numbers is what's actually happening. In some ways, the Reserve Bank and ourselves always say business conditions, i.e. what actually happened, is more important than confidence. Confidence is important because if you don't got confidence, you don't invest, you don't employ. You sort of sit on your hands. But what we're seeing in terms of actual outcomes is this. So again, last observation is basically yesterday. It's come down a bit, but the trend is getting higher and the trend is above the long-run average. And we're very much concentrated in the non-mining sector, but this is encouraging. And it's basically what NAB, is, the biggest business bank, is seeing internally as well. So we are encouraged by that. Again, though, it depends where you are. So if I take these numbers and break them up at a spot by industry, what does it look like? And think roughly around 0 or maybe around +5 is neutral. The miners are not happy, okay? And particularly mining services. And so you're seeing blue is actual conditions, red is confidence, so they're not confident and they're not doing well. Doesn't mean the big guys who land iron ore into China at $30 a tonne are necessarily doing bad, but the rest are. And so that's one of the big issues. Other sectors that are sort of not doing so well is wholesale, which is currency goes down, price of importing goods go up, and you haven't got the pricing power to go through. So they get crunched. Manufacturing there is slightly negative, but it's a hell of a lot better than what it was 6 to 12 months ago. The sectors that are doing really well is what we call personal recreational services, layman's terms, consumer buying services. Consumer has money. If the consumer thinks they have to do something, They will. So they will educate their kids. They will whinge about the utility bills, but they will pay them. They will go and see the doctor. And if they feel like they need a break, they'll go and do it. So, and that, by the way, is a third of the economy. So that is really important. Finance is not NAB. Finance is actually finance, business services and property. So what it really is property. The other sectors that sort of looks a bit mixed is this construction sector. Now, that's sort of slightly misleading because we've got half of the constructors who are building apartments and the other half are building mines. So if I sort of sub-broke that up, I'd have one sector that's through the roof and I have the other sector through the floor. And another way I can so this is a story that is really mixed as to where you are, with some really positive things like a third of the economy doing really well. I was saying to some people earlier, one way to think about it, we've got NAB $260 billion in home loans. The current rate is around 80% of them are paid in advance, and they're paid in advance for more than a year, which is a lot. Okay, and we also, when we go and see the corporates, they've got cash. So we're trying to lend them money and they say, no. They give us deposits instead. So the balance sheet, so you might have seen the interest rates on the deposits going down recently. Another way we can sort of look at this is we do the same thing privately as what we do publicly. In other words, we get all the bankers, and it shows something a little bit more obvious. So if when I ask the bankers, I deliberately separate out the construction industry into various sectors. Now, a lot of graphs there, but if you look at the green line, I've just put an arrow. Where you were in 2012, we were down at net balance minus 30 for property. Today, we're net balance plus 40. And if you look at the miners, they were plus 40 and they're now minus 20. So again, you get this really big difference in terms of what is happening within sectors. And if you look at thermal coal, they're basically off the bottom of the scale. So it really depends where you are in terms of looking at some of these things. Again, internal data. Left-hand side is just breaking it up by state. And what we're seeing is essentially New South Wales and Victoria really strong. The right-hand side, and on the left-hand side there, as you're looking at it, we've got Western Australia and Queensland doing pretty poorly. South Australia is doing even worse. And then we look at demand for credit. Demand for credit is basically very strong in Victoria and New South Wales, and not good at all in Western Australia, South Australia. So what we're seeing is a move away from the mining states into the states that don't have as much mining, that are into the service sector and are also benefiting by the property market. So I think that's really important in terms of what's happening in terms of the dynamics of where you see some of the economies at present. One thing that people sometimes don't realise, this is straight out of the national accounts. So GDP looks all right, but if you look at the real income going through the economy, it's actually flat to negative. So what's happening is consumers are basically not getting, well, they're getting a pay rise of around 2.5% on average, which is the same with inflation. The miners are getting big falls. And so there's no real income out there. And so if people are scared and they've got no real income, they pay the bank back. And they're very careful about what they do in terms of their spending behaviour. And I'll be interested to see the panel later on. But one thing we do in terms of trying to get an understanding of what the consumer is spending and where are they, we have like a mini census each quarter, which we basically go and ask 4,000 consumers each quarter, where are you spending your money?